Welcome back to the Simplify Senior Transitions podcast, the show where we bring you real stories, expert guidance, and trusted resources to help families navigate the emotional and financial journey of transitioning into senior living. I'm your host, Dale Corpus. I'm a senior transition specialist and real estate expert based in the San Francisco Bay Area. And I'm also a part of the sandwich generation, balancing work, raising kids, and figuring out options and resources for my own aging parents. And that's exactly why I started this podcast, because finding trustworthy, clear answers can feel overwhelming. It's so fragmented, and oftentimes there's no single place to go for support. This podcast is here to change that. Today's episode is about a topic that often stirs up a lot of confusion: reverse mortgages. If you've ever wondered whether it's a smart solution or something to avoid, you're going to get the real answers here. Joining me today is Dan Biller, a reverse mortgage specialist with New American Funding. Dan has years of experience helping seniors and their families understand how reverse mortgages work, who qualifies, what the risks are, and how to use this option responsibly to fund long-term care, stay in your home longer, or reduce financial stress. Let's dive in.
Welcome to the Simplify Senior Transitions podcast, where we help families navigate senior living, real estate, and everything in between. Hosted by Senior Transition Specialist Dale Corpus, this show brings you expert insights, real solutions, and stress-free strategies to make senior transitions simple. Ready to dive in? Let's go.
And we're back, everybody. Hi, Dan. Welcome to the show. How are you?
Good morning, Dale. I'm doing well. Thank you for having me on today. I really appreciate it.
You're welcome. This is your first podcast, right, Dan?
It is a virgin to podcasts. I'm
well,
really
don't
excited,
worry.
but little nervous.
You don't need to be nervous. Pretend like you're talking to a friend. And actually, you don't need to pretend. We're friends already. So yeah, let's just jump right in. My first question to you: can you tell us a little bit about how you got into this space and why you focus on reverse mortgages?
Sure. Well, my background before reverse mortgages was with Social Security, actually.
Okay.
I worked with the agency for 16 years, started as a claims rep, and I was interviewing retirees and people on disability all day, every day.
Yeah.
So I heard a lot of stories. I saw what was going on in people's lives and helped them, for that job, get their benefits. I went up through management and a number of roles with the agency, and in 2021 during COVID, I did pivot over to reverse. I have a mentor here in the area that was going into a higher role, and the opportunity opened up. So I jumped at it. It was a great life change for me, kind of working more on my own and part of a team versus management. So I enjoy that, but also staying in the senior space. I mean, now I'm at about 20 years in the senior space, and I love it because I can advise people more. There's so many more options in reverse than people realize. So I love helping them out, helping the community.
Okay, got it. I know there's plenty of loan officers that do reverse mortgages out there, but I want to ask you, what sets your approach apart when it comes to educating seniors and families about these options?
Well, Dale, that's a good question. Word education, right on the head of the nail there. That's my main focus, is making sure that people understand about reverse, what it was, what it is now, the protections and the solutions that it can provide. I like to learn about each client's individual situation, what brought them to learn about reverse, and then tailor my response to them and anyone else that they'd like to bring into the picture, whether that be family members, other advisors, trusted advisors they're working with, anyone, just to give them a full picture of what reverse is, all the options, because it's not one size fits all, and let them know that I'm here to hand walk them through the process, but also guide them for the rest of their life while they're in the program. I'm not transactional. I like to do a holistic approach and really make sure they know that them and their family is going to be taken care of down the road.
Got it. Now, just for my clarification, are you only doing reverse mortgages, or are you doing regular forward mortgages like conventional, FHA, and other things like that?
No, actually, what I love about my company, it's New American Funding, is they have us specialize only in the reverse space, which isn't completely unique, but it's a great benefit. We have colleagues that do all of the other type of residential loans. So if that comes my way, I'll refer it to someone that's in the right lane for that. I stay in the reverse lane only. It
Yeah.
really lets us keep up with the changes in the program and learn the ins and outs of underwriting and program requirements. There's so many types of reverse that people don't realize. So I can really happy to say I'm just a specialist in that program.
Yeah. So when you really say you are a reverse mortgage specialist, that's all you do. You really are a reverse
Yeah,
mortgage specialist, right?
that's what I do all day, every day.
Okay. And moving on, why do you believe reverse mortgages are so misunderstood?
I think it stems from a number of things, but mainly just the old stigma from 40 years ago.
Okay.
No one really realized that President Reagan in 1987 made a whole slew of changes with HUD and FHA.
Hmm.
And now the program is very regulated by the government.
Hmm.
But these old stigmas stick around, I think, because the name is the same.
Yep.
So that has just sort of perpetuated through the years. And people don't know where to go to learn about reverse. They listen to the news, they listen to their neighbor, they listen to somebody in the grocery store, and they just hear what they hear. And they don't always have the time or the desire to seek out a professional and really learn what the program is and what it can offer.
Okay. Got it. Geographically, where are you based and where are you able to help people?
Well, I'm based in San Jose. I cover offices in Morgan Hill, San Jose, and Burlingame with my company. I
Mhm.
can work in any of the states I'm licensed in. So California, Hawaii, Arizona, Idaho, Colorado, Connecticut, and I'm actually working on Washington. I
Okay.
did that to help out my clients that are relocating,
Okay.
mainly from California. And also, yeah, a bit with helping out our company, just have coverage in those areas. I travel to Hawaii often. I used to live there. So I
Okay.
have a lot of ties in that area. So it just depends. But that's me. And then our company can help anyone in any state. So it's really great.
All right. Perfect. I want to segue into reverse mortgage myths and truths. First question. What are the biggest misconceptions people have about reverse mortgages?
Well, the big one is mom and dad are going to lose their home or
Okay.
the bank is going to take the house. That was an old myth from, like I said, before the Reagan administration overhauled everything. A reverse mortgage now is just a lien identical to a conventional mortgage. It's a lien on the title, and borrowers stay on the title. So that never changes. Also, they might think I'm going to lose the house when I die. Also, a myth. The home is inherited just like a home with a regular mortgage would be or a free and clear home. The
Okay.
property goes to the estate or the heirs, and they can keep the rest of the equity. So those are the big ones. Or just, I'm going to lose my home some other way.
Yeah.
The only way to lose your home with the reverse mortgage is actually fewer ways than with the conventional mortgage because
Mhm.
the reverse borrower's in control. All they have to do is pay property taxes, home insurance, and any HOA. You can't default. You can't go into foreclosure any other way. Long as you live in the home and that's the rest of your life, you're in control and you're there. The regular mortgage, if you don't make a payment, we all know what can happen is foreclosure. So it's actually harder to lose a home with the reverse than a conventional loan.
Okay. Why do you think there's such fear around the idea of borrowing against your home in retirement?
Well, Dale, I think it goes to just sort of it stems maybe from the American dream, right? You buy a home when you're young, you work all your life to pay it off, you have it in your retirement. It's just an asset. You don't want to touch it, right? That's kind of the sort of traditional way that Americans look at home ownership. And I think that then the idea is to pass it on to your children. So it's always been something that's just not going to be touched. People used to have a lot of pensions, then it replaced by 401ks, but they want to draw from those other assets in retirement
Mhm.
beyond Social Security. But things are changing, and I don't know that people's mindset is always keeping up with the reality that we're
Yeah.
living in now. The amount of people with savings is very low. The amount of people with investment accounts is very low. So the home, almost by necessity, should become a retirement tool.
Mhm.
It shouldn't be the last resort. It maybe doesn't have to be the first resort, but I think it's something worth learning about and seeing if it fits into your retirement plan and if it can make your life and your family's life more comfortable.
Okay. How do heirs actually benefit or get impacted by a reverse mortgage?
good question. And a lot of heirs will ask me that when we talk. A benefit that maybe people don't think about beyond providing for mom and dad, right?
Right.
Or letting them age in place. That's kind of an obvious one. But if you think about it, parents could benefit their heirs by helping them with a down payment on a home of their own. We're in the Bay Area, right? A down payment is a huge challenge for younger people today. But maybe mom and dad are sitting on a lot of equity. They're not doing anything with it. We like to call that pre-inheritance. So that's a huge way to build that generational wealth, right? The parents can pull funds from a reverse, let their children purchase a home at a younger age, get into that house, start building equity, start building wealth, and benefit from it for many more years than waiting to see what their kids do with it or not see what they do with it when they've passed away.
Yeah.
So that's, I think, a great way to benefit. They could also buy an investment property and create generational wealth by having that other property as an income source to pass down to their children when they pass away, as well as the home, their primary home.
Okay.
Impacts, the biggest thing would be not learning about a reverse properly, not learning with your parents what to do with the reverse to make it work in your favor. So it could impact an heir negatively by one, not getting a trust, and the
Okay.
home has to go through probate. So mom and dad have passed, the home had a reverse on it, and now it's going to probate court. In California, that's easily going to add a year, maybe
Right.
more, to the disposal of that asset, whether they want to keep it or sell it, and paying off the reverse. What they may not know is they're on a timeline with the reverse after the second borrower or the final borrower has passed away. So that reverse needs to be resolved within 6 months, up to a year if you're approved for an extension. But children could be very negatively impacted by not having mom and dad had a trust, getting stuck in the probate process and dealing with, a reverse servicing company that's saying, hey, what's going on with this? So just not taking the initiative to learn or having someone like myself to guide them through that process, it can negatively impact you. But if you know the facts, it's totally avoidable.
Okay. Now, I'm sure you have a lot of success stories. Can you walk us through a few examples of when a reverse mortgage worked beautifully for a family?
Sure. I had a gentleman that was introduced to me by a colleague who visits people in recovery centers.
Okay.
He had just had a major medical procedure done, unexpected, and clearly had a lot of bills and was looking at a lot of rehab going forward, many, many months. She called me and said, hey, he doesn't want to go to assisted living. He'll be
Okay.
in a recovery center for maybe a month, but he wants to go back to the house where he's lived his whole life. It was a family home. It happened to be free and clear, which was great, but it's not a requirement. But we talked about reverse. He had a lot of equity. It was in Santa
Mhm.
Clara County, and we did the reverse for him. We started it while he was in the recovery center. I went out there, I'm mobile, visited him there, got things signed, got his documents, things like that. And by the time we were done with the loan, he was about to go home. So he was able to access a line of credit
Mhm.
and pay off quite hefty medical bills and as well as pay for in-home care.
Okay.
He's up and about now, you know, kind of regaining his mobility, which was the first priority. But then the reverse had also helped him. We did a trust review. I introduced him to some options with how to get his trust updated. It was 40 years old. Few repairs around the house. The home was, quite outdated. It needed some updates to help with his new living situation. So that one, it worked really great. I did an actual pre-inheritance one recently where a parent helped a child purchase a home. He was moving out of the area. So things like that. It does happen quite a bit.
Got it. I know that a reverse mortgage can also be used to purchase a home, and it's probably really rare to do in the Bay Area, but have you ever experienced, have you ever seen any of your colleagues or even yourself using a reverse mortgage for a purchase?
I do see it. And you're right. In the Bay Area, it's a little less common. It might be for like a downsizing situation to a condo,
Mhm.
um, just because of the amount of funds a reverse can give. It's pretty conservative,
Mhm.
but a lot of people use it when they do sell in the Bay Area and maybe move to a less expensive area or more retirement friendly
Got it. Like when you move
community.
in.
So
Yeah. Out of state.
moving out of state, even to Hollister, the
Oh,
Central
makes
Coast.
sense.
Yeah, those 55 and up kind of gated resort living communities. There's some down in Hollister, probably the closest, or Tracy. It lets them put 50 to 60% down and preserve a lot of those funds that they made from selling their old home that they lived in for years. And with those funds, they can live off them, they can invest them, they can create another source of income, anything they want. But it can make their retirement a lot easier rather than throwing $1 million into a new house. They can get into it for 5 or 600,000. So it really can preserve a lot of wealth. And they move in with no mortgage payment and all the regular protections from HUD and FHA that someone who is aging in place with a reverse would also benefit from. So for the rest of their life, if they chose, or at such time, they maybe would eventually need to move again to assisted living. There's no penalty in stopping a reverse if you need to move out of your home. So there's a lot of ways to use the purchase, yes.
Alleviates just a lot of the financial stress. It takes that out of the picture so they could just enjoy life even more so,
Exactly.
their family. But moving on, what are some red flags you see where you'd actually recommend against doing a reverse mortgage?
Yeah. And, that happens not all the time, and not even 50%, but it does happen. And I'll be the first to tell you this isn't a good fit. A big one is if they're just saying, I want to use this like a bridge loan.
Hmm.
Um, the biggest issue with reverse in reality is the initial cost.
Right.
So if you're going to sell your home in under a year and not live there, and you're going to have to pay off the reverse, you really want to give it some thought. Is this worth it? Is there another avenue I could take? Because you're not going to really reap the benefits of the program. It really plays
Yeah.
out in the longer term. So, yeah, I wouldn't advise someone doing that. If they say they're going to rent out the home, clearly they're going to not have it as their primary residence. So, you'd have to pay off the reverse at that point. If you fully rent out a home, you can rent out rooms, no problem. But if you're going to leave, I would tell you it's just not worth it in the long term. So, the duration of the time in the home is a big factor where you
Okay.
would tell people not to do this. If their disabled child maybe needs to stay in the home and live there, and they don't have a means to pay off a reverse when the parent passes, and that's a huge concern, I would say think about that because, and unless the heir can prepare by purchasing maybe a life insurance policy to pay the reverse when they pass. If you're really concerned about the heirs and they have no means to pay off a loan or obtain other financing to pay off a reverse, you might want to give it some serious thought before proceeding. So there's always times, and every situation's different. And that kind of goes back to the education piece, where I want to give you as clear of a picture as possible so that you see all the avenues and possibilities
Hmm.
and what could happen down the road so they can make an informed decision.
Okay. Is there a too early or too late age to consider a reverse mortgage?
Um, well, it's never too early to learn, right? Whether
True.
you're learning for yourself or from mom and dad. In California, we have programs for folks down to age 55. So most people approaching retirement, it may behoove them to at least learn about it and know if it's worth getting early on in retirement or if it's just not a good fit. But learn about it as you learn about estate planning, as you learn about financial planning, as you learn about tax planning. Just do it all together. It's only one more topic, and you can do it in an hour or so. Um, Never too early, but 55 is the minimum age. As far as too late,
Mhm.
um, technically no. We always have to make sure that the borrower is, competent, whether they're conserved, whether we're using power of attorney. Sometimes the kids might take a little more charge depending on the condition that their parents are in or another family member. So I always want to make sure that, the older the borrower is, we have more to check up on to make sure things are right and no one's coercing them and that it's the best fit and the right thing to do. So it's kind of more onus on me as a loan officer in that case. But if they need the funds and it'll help them, I wouldn't say there's ever a too old age.
Yeah, that makes sense. Now, how do you ensure that your senior clients aren't being pressured and that they understand everything?
Yeah, good question. Again, I'm going to go back to the education focus. Most of the people I meet are word of mouth or through a referral partner that I trust. If you sent me somebody, I'm assuming they want to learn about reverse. So I'm going to do my best to educate them, find out what's going on with them, and give them the clearest picture possible. We have what we call a reverse mortgage roadmap. It's just something our team developed, and it hits all the topics, the costs, the benefits, the solutions, and the basics about the programs that I always like to cover with people. At the end of it, I always ask them, hey, was this conversation helpful? What other questions do you have? As we go through the process, I try to cover everything with them that reverse mortgage counseling person would cover in the session so that there's zero surprises.
Yeah.
And I always ask them after counseling, were there any surprises? How did it go? Was there anything I should have covered with you beforehand? If they're going to bring in family members, great. Make them part of the conversation
Right.
because another perspective might have questions that the initial person did not, whether that's children bringing in the parents or parents, with their children or a friend or an advisor. I'm happy to talk to people with their attorneys or tax advisors. It's just sort of get the word out to everyone, make it as clear as possible. And not feel like they're being sold. My approach is here's the program, and then we'll take the step of a proposal where they'll get the actual numbers and we can cover that as well. And then I would let them digest a little bit, talk about it. I'll follow up. But, in the end, it's their decision to proceed to an actual application or not. If not, here's my name and number. I'm really glad you learned about the program. If you know anyone this might benefit, just say, hey, I met this guy, Dan.
Yeah.
He gave me some great information, but I'm not a salesy kind of guy. So it kind of comes natural to me not to pressure people.
Right. Right. Now, say the senior reached you directly first to inquire about reverse mortgages. And obviously I work with seniors too, but do you try to if you know they have kids, do you try to immediately bring the adult children in the conversation? Just because they know so that everybody's on board and they know what's going on. And then if so, how do you make that all happen? How do you get the children on board to understand what their parents are considering?
Well, first I might probe a little bit about the family and who's around, or I'll say, what are your plans with the home? Is it in a trust? Is it in a will?
Mm-hmm.
Who are you leaving it to? And kind of try to find out that way. Because then some information will usually slip out like, oh yeah, my son, he lives here in San Jose. We're great. We have a fantastic relationship. That's an easy way. But if something comes out where, oh, I don't talk to my kid, I don't know. It could be anything, but I'll feel it out and see how comfortable the client is with that.
Yeah.
In the end, it's their decision. So I don't always try to force that on a borrower because it's sensitive.
Right.
It is their home in the end. It's fantastic to bring the family members on board if you can. That's an ideal situation. But some people may not want to do that. And so it's a very private decision in the end, even sharing whether someone who's applied to a referral partner is a private situation. So I leave that to the borrower to communicate that back. So it's a balance, respecting privacy as well. So again, it varies in every situation. So you really have to listen to your borrower and see what solution they're looking to accomplish.
Yeah, I love how you answered that. That's great. Now, how do you recommend families have the talk about home equity and funding senior care?
If it's maybe adult children talking to their parents, they could just bring it up when they're having a talk about general finances. Make that something that they learn about together with their parents, because they're going to say, hey, mom, hey, dad, what's the time frame? 5 more years you want to stay in this house, or 10 more years, and then we'll reevaluate again. They could look at their investments, look at their tax situation, their pension, what their plans are, renovations, travel, and just throw in home equity with it. It's just another topic in your retirement tool belt. Instead of bringing in reverse mortgage as this huge topic, just integrate it into a regular conversation so it's a holistic approach. If it's a parent bringing in a child that's resistant, and they may have the attitude of, well, that's my inheritance. You can't do that. You're going to lose the house and I'll get nothing.
Mm.
They could talk about, their needs in retirement and how am I going to pay for my maybe in-home care, or how am I going to pay for this renovation? The house isn't suiting my needs anymore, or even a downsize, a move to a lower maintenance community after doing a reverse purchase. But again, in the end, it's the parents' home and that's their choice to bring it up. But, you know, I think bringing it up with other topics that go with life planning, estate planning, things
Mhm.
like that is a great way to approach it, whichever angle you're coming from as far as generationally.
Okay. Are there financial professionals you collaborate with during this process, like fiduciaries or financial advisors?
Somewhat, yes. Fiduciaries sometimes will reach out to us if they
Mhm.
are managing an estate for someone who's not able to do it themselves, and
Okay.
they'll learn about it and potentially do a reverse on the primary home. So, yes, we do work with them. And in that case, it would be a very close process through the loan application.
Mhm.
But certainly, financial advisors and estate planners uh, on the regular, and real estate agents as well. Those are probably the big three that we coordinate with. I mean, also divorce attorneys,
Yep.
CPAs. So yes, very closely. With a reverse purchase, you need to be arm in arm with that buying and selling agent as well as a client. And then again, agents come to me when they need to sell a house with a reverse on it if the borrowers have passed. Or like for me, I always like to make sure if I had a client and then they passed and they were introduced by a realtor, to make sure to get that person back on board to sell the house. I tell realtors, get your name on the trust, or at least have your card attached to the trust so that the heirs know who to call because they know you know what to do on a home with a reverse mortgage. So just, keep it circular, keep that network of professionals close. And, you know, as a village, we can all handle a reverse mortgage. It's really not that complicated. They can handle the sale of the property, things like that.
Yep. When does it make more sense to do a reverse mortgage versus selling the home outright?
Again, it's wishes of the client, I think. There's an emotional stress, right? If you leave a home you've been in for, say, 40 years,
Mhm.
but you need to think about, does the home still meet my needs and can it meet my needs? Both
Mhm.
physically, the construction, is it 2-story? Is it just too narrow in all the hallways for a walker or a wheelchair? So it just depends. If it's something the reverse can make possible and comfortable for them, or finance that in-home care they need for a few hours a day, it makes sense to stay in the home. The borrower is going to be more happy there. If mom and dad are isolated in their home, you know, I think a family would want to consider the emotional satisfaction of moving somewhere where there's more of a community, whether that's 55 and up or assisted living. You don't want to leave them in a home by themselves where they can't get that interaction and they may not be as happy. So
Mhm.
it's a combination emotional, but also the physical and financial numbers, that the house is providing for them. It's different for everyone.
Okay. Now, what about clients who are trying to age in place? How does the reverse mortgage help with that?
I think a great way it can help is by providing a line of credit
Okay.
to kind of fund their needs. You don't have to take out all the equity at one time and start accruing interest. You also don't have to get 3,000 a month, whether you need it or not. If you take a line of credit, it can help you pay your monthly bills just by doing draws when you need it. It minimizes the interest accrued, which can erode the equity over time,
Uh-huh.
balance out on property appreciation, of course. But it's a great tool because they can pay it up and down the line of credit as needed. Let's say they came into some extra money. They wanted to pay down the reverse or just pay interest only to keep the balance flat.
Mhm.
That's a way and an option for them with a reverse mortgage. Also, the line of credit, HUD put in a great thing called a growth feature where the line of credit grows at the same percentage per year as the interest rate being charged on the balance. And I know
Okay.
that's a little confusing. It's something unique to reverse, but that line of credit can grow through the years. So let's say mom and dad did a reverse at 62 and they qualified for 200,000, just to pick an even figure. Every year, if it's 7% interest, they would get 7% more in their line of credit as available credit. It's not interest we're
Yeah.
paying them, but just more credit without reapplying. So through the years, I've seen people where the line of credit got really, really big. And if you hit a down market where appreciation is not so good, they're actually winning because all of that's guaranteed by HUD and FHA.
Okay. Got
So
it.
it can make aging in place down the road much easier because they have all this additional funds to access.
Yeah, nice. I love the fact that you don't need to reapply like you would on a typical line of credit, right? So
Right.
that's
You
great.
can refinance or reverse, but
Mhm.
this is a way that that's delayed and it really saves the borrower's time and money.
Good. I'm going to pivot completely to
Okay.
ethical lending in the senior space. For you, what does ethical lending look like in the senior space?
Well, it starts again with education, learning about your clients. I mean, to be ethical, you're going to offer them all of the programs available, whether that's reverse or even considering outside of that space, because, like I said, it's not right for everyone. You asked me when there's the situation I wouldn't advise a reverse. I'm going to tell my clients that. And I feel like the team that I'm on, my colleagues would do the same thing.
Okay.
We're not just going to offer them maybe the program to make them use all the money, up front. We're going to give them the line of credits, the lump sum, the reverse purchase options,
Mm-hmm.
the maybe you should just sell your house option.
Mm-hmm.
This isn't a good fit for you as advice, but I want to make sure that they get the whole picture. They look at it from the big picture, make sure they understand. If there's a question of their understanding, their state of mind, address that and see if that's when you really want to bring in family and make sure there's someone else to talk to, or maybe say, hey, do you work with a tax advisor?
Mm-hmm.
Bring someone else into the picture to make sure that that understanding is really there.
Mm-hmm.
If it's questionable, it's not common, but it does happen. So for me, it's education and a clear picture and guiding them through the program. Again, not being transactional, like, okay, you signed your loan docs, 3-day right of rescission, see you never. I don't believe in that. I want to follow that client, see how they're doing. Just call them. If you say hi, they're going to tell you how things are going. That's just how, most
Yeah.
most of adults and seniors are. So you guide them for the rest of their life. And I feel like
Yeah.
that's the ethical way to do it and make sure they're in the best fit, not only right then, but down the road too.
Yeah. Kind of a related question. How do you keep yourself and the industry accountable to do right by seniors?
Um, I think if you put yourself in their shoes
Hmm.
and, you know, empathize with them and where they're coming from and learning about their goals, their family, their needs in retirement. Also keeping up with current events, maybe seniors may not know what's going to be happening in the market as much, or as a homeowner in
Yeah.
general, what's coming around the corner with property taxes or any of those topics, being able to help fill them in with that, having a good, strong professional network of people
Yeah.
that you trust to work with. So I can, you know, I'm not a CPA. I'm not
Right.
going to give you tax advice because it's a liability for me and it's giving poor advice to my client. I want to make sure they get the best advice possible in all the topics,
Right.
that come up. They're going to have questions. I get questions all the time from clients, and I'll pivot them to someone that's a professional in that space. So I think it's a combination of those things. As far as the industry in general, it feels really, really good that HUD and FHA create all the guidelines for our programs, and
Hmm.
a lot of them are FHA insured. That's
Hmm.
very comforting, and it's one of the most regulated programs out there in lending, to be honest. So all of that together, it's a good foundation.
Okay. What advice do you have for families feeling overwhelmed by all the financial options out there?
Um, Slow down, have a talk, and just learn.
Hmm.
Educate yourself. Don't get caught up in it or stressed out and say, "Oh my gosh, I'm just not even going to learn about this because it's just too much going on, and we need to do something right now." There's always time to learn. If you have the luxury of a larger family, maybe somebody could go learn about financial planning and someone else could learn about reverse, and then you regroup and talk about it. But don't shut any options out because you might be missing out on something you didn't even know.
Yeah. What keeps you personally motivated to do this kind of work?
I think the results in the end and getting to keep up with the clients and seeing what our programs can do for our borrowers.
Hmm.
Get watching them stay in their home, improve after, like I said, a medical condition is a huge one. Aging in place is great. Getting a home renovated or just accomplishing those retirement goals.
Hmm.
Even if it's just debt consolidation.
Hmm.
I've had people say, "Hey, Dan, I'm not paying 6 different bills each month anymore. I don't have that weight. Just the ease of living now is so much better." So
Hmm.
it's personally motivating for me. And you get to be out there in the community and make a difference. And seniors can be, like I said, isolated, right?
Yeah.
Depending on their situation. So being able to help a population like that,
Yeah.
um, and again, just from my background with Social Security, it's always been a segment that I've been in contact with and seen their struggles. So it feels good to get to do that.
Yeah. Yeah. What's one thing most people don't realize about reverse mortgages until they actually explore one?
Um, Most people don't realize some of the solutions that it can provide. They'll say, "Oh, you can do that." They find out you can access funds and it's tax free, or they find out
Hmm.
about that growth rate on the credit line.
Hmm.
Just all of the benefits and solutions that our programs can provide. A lot of people, they are still of that mindset. I'd say the majority of people I talk to are of that mindset of the old reverse mortgages where it was Wild West and it wasn't a good option for a senior homeowner.
Hmm.
That really is the biggest change when you tell them this is what it is now, and it's a full 180.
Yeah. I know you worked with a lot of clients with reverse mortgages, and some success stories stick more than others. What's your favorite story of a client who was deeply impacted by working with you?
Um, there was one client, and actually this is in San Jose here, who contacted me and in foreclosure with her lender, and there were two
Okay.
loans or two liens on the house, had fallen behind due to death of a spouse.
Hmm.
This was kind of all going on for over 3 years. She hadn't lost the home yet, but there was literally a sign in the front yard about an auction. And we
Mm.
came to her and um, learned what was going on and getting phone calls like every 30 minutes
Oh, wow.
from the collection people. They're just kind of being hawks on her. She was crying. She's like, "I don't want to lose its house. It was
Yeah.
originally my parents' house. I have some other family living here, and they're kind of dependent on staying here just to afford to stay in the area." But she's like, "The auction date's in 3 weeks. What can we do?" And, explain that yes, there is equity and there's room to pay off your existing liens, but we need some time to do the reverse.
Hmm.
Um, Let me have the contact information for these creditor or multiple creditors. And so we put a rush on the file, worked with the creditors and the auction people, and like processing rushed it, like crazy
Yeah.
rushed through, and we got it approved and she signed. And it was basically the day before it was going to be going on auction. I mean, there were people looking in the windows
Oh,
at it to see if it was empty, if they could buy it, because it was
wow.
on these auction websites. But we saved the house, and she was just so grateful to be able to stay there and just get all of those people off the back. And she was so happy. Rip the sign out of the front yard, the auction sign, and that was pretty crazy. A little bit stressful to try
Yeah.
to beat the clock
Very.
there, but it just felt so good for her to get to stay there and not lose it to auction because that's just heartbreaking.
Yeah. You were quite the hero there.
That
She
one,
did.
yeah, that one
Yeah.
felt pretty cool.
Yeah. Dan, you're a wealth of knowledge. How can someone reach out to you if they have more questions or want to explore a reverse mortgage?
Phone, email, LinkedIn, any way they'd like. I'm certainly available and mobile through, Santa Clara, San Mateo counties. They can contact you and you know how to get in touch with me as well. But, uh, you know, I'm around. I try to make myself as available as possible. And if it's free, I'll pick up the phone and talk. So
Sounds good.
It's
And
on an open
I'll
book.
include your contact information in the show notes over in YouTube. Dan, thank you so much for being on the podcast today. I really appreciate how you broke down such a complex topic in a way that's easy to understand. The work you're doing helps families make informed choices, and that clarity is so important, especially during times of financial and emotional stress. And for those of you listening or watching, if your loved one is considering senior living and you need to figure out what to do with their home, let's talk. Schedule a free consultation with me by clicking on the Calendly link in the episode description below. Learn more about my services at www.simplifyseniortransitions.com. Have a quick question, DM me on Instagram at soldbydale. And if you found this episode helpful, please leave a 5-star rating on Spotify or Apple Podcasts. And if you're on Apple, a written review makes a big difference in helping more people discover the show. And don't forget to share this episode with someone in your life who could benefit from understanding reverse mortgages. Thanks again for tuning in. Dan, thanks again for being a great guest.
Oh, thank you. Thank
You're
you.
welcome. And for everybody else, I'll see you on the next episode of the Simplify Senior Transitions podcast.